Alright guys, welcome to another week. Yeah, today it's not the happiest day. Unfortunately, for those who don't know, now you're gonna know. During this weekend, on Saturday more specifically at 8 a.m. in the morning, Israel have been suffered a attack, and then up to now the news is that more than 1,000 people have died and more than 2,000 people have been injured. Yes, this will affect the market a lot, especially the oil prices. So UK Brent, US WT, and many other tickets that you may find around the market. So I may dive this a little bit deeper if I have more information. But if we look, 50 years ago, we had a kind of similar thing going on Israel as well, and it was very, very similar. And if we look, the oil prices, they rose more than 200% on that time. Do I think this will happen? No, I don't think 200% would be something, that the oil price would come up. But we are very close to the $90 right now. Now is 2 o'clock at Sydney time, and last week we've closed the week at $86 a barrel of petrol. And we already had a 5%, roughly 4.80 to 5% up move on the UK Brent prices, as well a 2% gap on the opening of Asia this morning. So definitely we can see the impact over there. What I think it will happen, very briefly, I will touch base on these tomorrow on my webinar with much more in-depth of analysis. So what I think it basically can happen is a risk off sentiment. For those who don't know, Google it, but I do have some videos here, but again, I will be diving this tomorrow on my webinar. So if you really want to know the impact of this whole thing that's going on Israel, subscribe to my webinar tomorrow, Tuesday, on 10 of October from 6 to 7 p.m. on Sydney time, completely free out of charges. Even, I may be analyzing some other economies, but maybe we're going to be focusing primarily on this Israel war that is going on. It is a war as they've stated, all right? So it's not me saying that it is a war. It is a war because they have stated that they are on a war. The Israel government say that they are on war, and they will do whatever it takes to control it. Anyways, so that's it. So let's move on. And again, if you want to know more about this, I'm going to be talking on my webinar tomorrow. Okay, so for those who don't know me, my name is Luca Santos. I'm the technical market analyst here at ACY Securities. And today, I'm going to be talking about the US Non-Farm Payroll that was last week. What a surprise. Well, you may think like, oh my God, everyone was expecting 168, 178,000 from 235,000 previous month. So it wasn't to be good. And it came around 336,000. So, wow, right? So that's already a very big headline if we think about it, right? Because we were expecting 176,000. And then it came as 336,000. But if we open up US dollar index or euro dollar or any pair that has the dollar on the base or the quote, we can see that on the time of the release, 11:30 on Friday, Sydney time, the market indeed felt it very strong, and it felt quickly. The US dollar rose quickly to 106.5. But then a few minutes after, the market realized that this isn't that good for the US. It is good, yes it is, but why it's not that good? Well, I do have my notes here. So unemployment rate was unchanged at 3.8. The nominal wage growth remained subdued at 0.2% month over month, below expectations of 0.3% gains. So this is first thing, this is one thing, right? So everyone was expecting, okay, so it came a massive number of employment, but more than half of those employments, they are not full-time, they are part-time jobs. So if we think about that, if they are part-time jobs, there's a big probability of next month they'll not be working anymore. So it doesn't take much in consideration, right? And then as well, for those part-time jobs, they don't get paid the full fee, the full stands, right? So everyone was expecting 0.3%, but it came as 0.2% on the wage growth. So it didn't rise. It went down. But I'm going to make very clear, as I've been talking already, this has a big impact on the market during the week. Yes, it will have a big impact during the week. Why is that? Well, if we think about it, right, last Friday we did have that huge impact on the US dollar. We will continue to feel it during the week, right? And another thing is, Fed, it's more than 60% sure that they will have to raise interest rates again, one more time this year. Well, everything that has been mentioned, right? Nothing out of all expectations. I've been mentioned these already. The Fed won't cut this year. The Fed won't cut this year. The Fed won't cut this year. They did not cut. They did pause. Yes, that's fine. They will pause, but they will raise one more time. There's only one thing that we have to pay attention this week, and it's on the CPI on Thursday, 11:30 p.m. on Sydney time. So Thursday on Sydney time and 11:30 p.m. on Sydney time as well. We're going to have the US CPI. If it comes as expected, should be fine. But if it comes higher than expected, then definitely the Fed will have to raise another 25 basis points on the rates. Okay, so this is only the US analysis. Very briefly, I do have 2 pages that I will go on tomorrow on my webinar, 6 to 7. So if you are interested on learn macroeconomics, on learn how to apply these macroeconomics on the Forex spectrum, then please, I'll wait you tomorrow, 6 to 7. Come, ask for your friend to come with you, watch both of you, and that will be very, very helpful, I guarantee you. All right, so anything, just let us know down the bottom on the comments. Please like this video, subscribe, send this video as well for a friend, maybe she or he likes to trade. And I see you in the next video.